Good evening, everyone. This is Henry, and as we get into the premium content that will apply for Friday, July 20th, I'm starting off with a look at the skew. Now, I try to cover this in each night's video, just in case you didn't catch last night's or however it falls for you. And I think it's an important signal. So, I've been discussing it each night, and I'm not going to tell you that this is going to guarantee a sell-off by any means, but it is the idea that this is the highest reading that we have seen all year. Now, it came off a little bit today, but still extremely elevated. So, I am looking at this with the idea that if you are looking for a reason to generate a little bit more cash into the weekend, that's probably not a bad spot to do it or a bad reason. So, keep that in mind as you manage your positions into tomorrow. Now, I was looking for, or ideally, I would have woken up to a little bit more residual strength today. As it works out, the markets were a little bit softer, so I had to manage a few things a little bit differently. Looking at the S&Ps right now, have not quite reopened for the extended session. It's kind of that same thing of just looking at this, that we've had a great run from 2714, and you could retrace, dare I say, 50% of this back down into 2775, and the bullish trend would still be excellent. And I think that's one thing that I remind myself of. I like to talk about with others, because if you have the correction like that and it happens quickly, it always seems so rough. But if you can prepare for it, or at least know ahead of time that would be very typical, then you can be prepared to manage that in a little bit different way. So, being cautious of markets here, reviewing my positions from top to bottom. AAOI I am finally done with. Now, I was just managing this through the shares, but as I mentioned in last night's video, that strikes me as being dead money into their earnings report, and I just chalk that up as a loss and move on into the next trade. There is no reason in sitting there and trying to force something like that, and just to keep you guys up to speed on it, I am done with that. For Amazon, the trade that I try to share the most, the kind of disciplined execution of this, was the symmetry that came up off of Tuesday's low, and we caught an excellent put spread off that from 7 to 2 and took zero heat on it. That's the type of trades that you really want to focus on, because the symmetry setup was so clean, the trigger was also very clean, and it was just the perfect opportunity. Okay, now after you make that 1272 extension, continuing to push it to the long side becomes a little bit more risky. Now I did that because I like these snow lines as targets, and I was looking at these smaller intraday squeezes to fire long. Well, as we open up today, I gave it a few minutes to see if it would hold the 1836 level, but then you start breaking this low, and that was just an area to be done with it. So it's one thing to have an idea, to be comfortable with the risk of the spread and wanting to see it through, but when something like that breaks, I just didn't really think there was much reason to be continuing to push it. Now, is there still another trade in Amazon? There very well may be. If we can keep holding the 1796 low, and you see your 15-minute charts shift back to the buy side, you might be able to catch a trade into earnings, but, I would stay cautious with that idea and keep the overall outlook for the S&Ps and focus as you think about that also. Now, Best Buy had an excellent day today, and this is a name that I'm going to work to continue to build up into a bigger position here. It's a spot where I don't want to go flat. When we started the video, I talked about generating some cash into the weekend. For some spots, I think that will be smart. For others like this, I'm not near my full exposure. The signal has yet to fire, so I kind of have to stay in these names, because otherwise I just feel like I'm being a little bit too jumpy. But instead of buying more of it up here, I keep the extra cash that I could put towards this. I've got 64 days, which I think is plenty of time, and then I'd love to buy it back down here. So same thing, if we're trading down at 75 on Monday or Tuesday, this position will be down. But rather than being down on a whole batch of it that I added at the highs, I've got that cash ready to deploy, and I would love to buy it somewhere down near those levels. Next up, we've got Dropbox that, I covered this with you in the trade of the week where I sold that naked put, and I just covered it today. I think I ended up losing a dime on it. This is the kind of thinking that I was working through. I think the chart is still fine, but it's just saying, let me narrow down my positions, let me get a little bit more into cash, and, I didn't end up taking the assignment on it. I did not make a profit on it. I'm just done with that one, and I'm going to try to find a little bit better spot to trade. At the same time, I am noticing this daily squeeze, so maybe I may have got out of that a touch too soon. I guess it's another way of saying keep an eye on this one, but just to let you know what I have done with my trade, that's the management. If you start to see this thing going bid in the next couple of days, it could still have a pretty good signal in it. Next, we've got Domino's, which I really felt like, and I didn't recommend this trade. I felt like the butterfly on it was probably not going to work, so I would have done better to have just avoided that one. I just check it with a one lot. eBay ended up dropping a little harder than I was looking for on the long straddle. I got a decent exit on it, surprisingly. You can see that this is the other thing about these strategies. They may seem kind of risky, and they are if you get out of line with your position size, but even on a move like this, it was still manageable. So I didn't sit there and keep holding it because it didn't stay within what I was looking for. But position sizing is key, and then still, I still like trying to use these higher probability strategies. I know there was some comments about some people doing those in Microsoft today. And based off where I saw it trading last, 105.68, those will work out very well. So that's the latest for me on eBay. For Etsy, we had an extended discussion on this in the Fib series. It ended up breaking the symmetry that I was trying to work with, but overall I do still like Etsy. I think that you just have to be a little bit patient with this one. Remember that the whole concept is to build the position inside the 8 and the 21, and now we're just getting right back down to it today. So I would have preferred the little minor area of symmetry hold. You can see that it did get a little bit of a bounce from it, but then ultimately ended up breaking. So overall, I do still like Etsy. It's just might require a little bit of patience. And then same thing there. The trade that I recommended was buying the long call, and it's down. The shares are what I'm sitting here kind of working for myself. I'm okay with those for now. But I'll be kind of slow as I build into it and not afraid to go into the weekend with a little more cash. In Five Below, this did a great job of coming into targets today. This is exactly what you try to mimic with the squeeze, the accumulation of the position near moving averages, and then sell them at that 1272. So we took profits on the directional call that had a nice hit today, and then think about the vertical call spread from the perspective of, what if we were right on top of expiration today? Well, the 110 would the 110 would expire worthless. That all just falls off, and then you're left with the intrinsic value of the 100. So if the only thing you have left is the 100, well then that's going to be worth $7.93. Since that is not what the spread is trading for, since it's only trading at 620, well then that this is going to be a positive theta trade because you have more intrinsic value than what the trade is going for. So if you slide this over a little bit, you can see that we're making $1.52 in decay. We are still bullish based off the delta, but this is just a more forgiving position to hold than the directional call would have been. But that is exactly what you try to do with those patterns. In Home Depot, this is another that I took my trade profits on this today. We started this idea with the trade of the week, and it has worked out as perfect as I could possibly ask for with zero heat and really just a perfect setup. So I enjoy getting to do this with you guys so much each day because, it forces you to run the work, and it just, it's nice when it works out as good as this one did. So I took that through both of my accounts. It was a very nice symmetrical setup. Now you may look at it and say, well, why did you take profits if you haven't hit the target? And it it goes back to those opening comments of saying, I've got to put some of this in cash, and always ask yourself, are you comfortable with a pullback at least into the 8? Will you tolerate that while you're waiting for these overhead targets? And I was just in a spot where I really did not have any interest in giving that back. So we made about 35% on the long call. All the put spreads, all the idea of selling those $200 puts that we've been looking at all week have worked very well. And yeah, big fan of Home Depot. I was joking about this, that I should have really piled into it when we bought new appliances for the house and had great service at Home Depot. So that was actually right there, kind of back in that zone. But anyway, neither here nor there, but it was, yeah, real good trades there. In IBM, I had we discussed the short straddle here, and I opted to go ahead and buy it back. Now, maybe I left a little bit of money on the table, but I didn't really feel like I wanted to just keep pushing into Friday. It is really my intent to manage a lot of the trades that I have tomorrow morning and then not really push these into their close. So with this sitting right here at 149.20, I just took the money and ran in that one. I happen to have just a little bit more bullish take in IBM, and a couple of the earnings weren't quite perfect for me, but that IBM trade is exactly what you like to see. ISRG was also very good. Now you'll remember that we have been discussing this one in these evening newsletters, and I think that there's something to be said for trying to watch these each day, because names like this I don't think are very easy for chat room recommendations. The options were kind of thin, and doing this in this way was an expensive way to trade it. $17 calls were not cheap, but if you know the setup and you can be comfortable with the risk, we outlined this before the trade unfolded. So it's the idea of buying these and buying a chunk of them, selling. I sold 4 of 5, and then the gains from those 4 pay for this one if everything just falls apart. And then you can also use your extensions and the expected move to sell a call against it just before the report comes out. And with the stock trading at 5:41 after hours, that's exactly what you're trying to do with those. So if you've been piggybacking and keeping up with the ideas on ISRG, that is exactly what you like to see, and it's probably just going to keep on trucking into that fire line of 584. Now I don't mean tomorrow, but I mean keep that 584 in the back of your mind, and then the next time if we finally do get a good solid correction in the indexes, we'll then come back and see if you can pick up some ISRG. In Lockheed, this has a very similar pattern to what we were focused on with Home Depot. Does not mean it's going to have the same results, but I compare the two because if you look at that 78-minute chart, they're both just nearly identical. We had a little bit of volume come in there at the close. I guess that doesn't do much for the analysis. I just still think this is a good setup. So these chart patterns really do resemble each other a good bit. You can see that that zone that we set it up off of is still holding very well, and I like Lockheed into 325. Admittedly, I may be a step or two late on this, depending on, because if you were following the CML tool, they've already been in and out of it. But if you are using that tool, try to maximize it with what we share here all the time, because if they've got the idea that this name will perform well in the 7 days or whatever it may be prior to earnings, and then you look at it and say, wow, and I've got a squeeze to complement that, those tend to be some pretty reliable setups. So I'm really focusing on getting a lot of positions scaled down tomorrow. Lockheed might be one that I take that available cash and pile into it, looking for a print just above the old highs. So let's kind of see how that one trades, but that is a trade idea that I think you want to at least keep on your watch list. Got quite a few positions, so let's keep working through them. We've got MDT next that but really does perform well. I am hanging in this one, trying to get that new lifetime high at 89.72. We've got a little bit of profits in these, so if you'd like to book them, I can understand. But when you've got that monthly squeeze too, granted the monthly may take some time to fire, but overall I think that chart has a lot of potential. And I am still long it. Microsoft. I looked at this in the fib class that we were doing into the end of the day, and the main thing that I would share with you here is that it's Microsoft, gosh, now up here at 107. I thought about coming in and buying the shares around 106 and then just figured that I didn't want to get myself tied up in that also. But at this point, those orders that I shared are not going to be, obviously it's not trading down into 102 like it was. If you look at the extended session, and this is what can, sometimes be a little tricky about earnings. I try to take the emotion out of it as best I can. But this is what I was looking for. That trade into 102.35 was ideal. The problem is the bid that it's caught after hours. So this is a little bit stronger than I wanted to see. Sometimes that is the risk of playing things counter trend. And I didn't even really I didn't feel like it was aggressively bearish as much as I was a little bit more neutral in it. But Microsoft continues to make new lifetime highs, new lifetime high in the extended session now, and there's probably just no reason to get in the way of that. So I'll see how it opens up tomorrow. Once again, that was only trades that I discussed in the fib course if you were there. Otherwise, it may be better to not have those on. Looking at Roku, this is a name that I would still like to build up a little bit more into. Admittedly, you could argue that the squeeze signal has fired off the daily, and you don't want to keep pushing it. There is a signal off of the 39 that may help be a catalyst for the next little run higher. Overall, I'm still okay with it. I just have the 1 here, and at this point, I like it because I think you could catch some of that IV into earnings. At the same time, earnings is still a pretty decent ways off. And you might, I don't know, it's just not a trade that I feel like you get much of a discount right here. Maybe have some cash on hand to buy that if it pulls back. In Target, this is a daily squeeze setup that we've started to pursue. I've got a 36-day out call, and these are off to a good start. So I kind of always say that phrase just jokingly, how big a boy are you? Just buy it up, get in here and bite off as much of this as you feel comfortable with. When I recommend trades, I try to work around the idea of sharing no more than $3,500 of risk. And that's if everything just completely goes against me. So as you try to follow recommendations that I make, just know that that's usually the key focus. And if you know that, well, then you know that this is a fraction of what I'm willing to get into. Now, with the way it closed, yeah, you kind of wish you would have taken a little bit more, but if we see any type of weakness at any point next week, that'll be a great name to come in and continue to buy. You've got TJX that I took some profits on this today. That's been a pretty much perfect daily squeeze, and same concept, right? You got to keep it simple, and you'll notice with the setups that I share with you, they're generally pretty much all exactly the same thing. Accumulate the trade, accumulate the position inside these moving averages. When the parabolic SAR shifts, try to use that as a complement to catch the momentum into the 1272 extension. I wish it was always as simple as that explanation, but that is the core part of the idea. That's exactly what we wanted to see with TJX, and it's given us an excellent move. In Twitter, my double calendar came in a little bit better today with the tiny bounce you saw, and of course a little bit of the vol falling off. At this point, I just need to see, because this is the only part of the trade that's kind of not even hurting, but if it was going to pin at 45, it needs to get it together. And if it can, well, that'd be great. The trade is still doing okay. It is a small winner. And then as far as the the straddle goes, I consider that to basically be flat, right? It's down about a dime. So I am still charting Twitter, I think, with potential to the downside, but if it decides not to break, the straddle will still be a little bit more forgiving inside the earnings series. Another name to consider to the long side is Williams-Sonoma. Now, this is a little tricky because the liquidity in the options just isn't really here. I have one short put in it that I think is a very conservative way of playing it. This is kind of a way of forcing myself to look at it on a daily basis and say, hey, you've got a setup here. It's a little more than having it on a watch list, right? So I like this. This is the way that I've gotten started with Williams-Sonoma, and I'm looking for that for higher prices. I don't know that these are exactly the same, but it does make me think of Restoration Hardware after that. This is another name that I would like to buy, and I think this squeeze is starting to shift in a way that you could do it. When I looked at this with you a couple of days ago, I wasn't quite as thrilled because you're below the 8 and the 34, and the squeeze momentum had technically fired short right through here. You're still below those moving averages, but the momentum is coming back up. So I think RH is a buy and is worth keeping an eye on here for the next several sessions. Thumbing through my Tastyworks positions, Etsy 5 we've all covered. Lulu was down a bit today. I'd like to see that get up off the 80 EMA, and I'm comfortable selling puts in here as opposed to buying the calls and then just trying to see that signal through. Spotify was a little rough today, down $4. I would prefer to see it hold the 80 EMA. I'm also using that earnings series that should continue to see some implied volatility kick up in it. I don't know that I have much else to say that's really good about this pattern. Sometimes it's tough because, you're waiting for the momentum in the squeeze to exhaust itself or, whatever it may be, and it just hasn't done that. So the signal actually still looks just fine. The price action would beg to differ. So not really a huge fan of the way that's unfolded so far. Probably worth pointing out these 78 and 130-minute squeezes. I think that if it can find its footing there off the daily chart, those still have a good chance to the long side. And then who could forget Wingstop? So this one had a nice rebound yesterday. That was a solid recovery off of that trend line. And it looks like it's trying to get it together. I haven't added any more to this one just because I don't want to sit here and keep chopping through this area. But it looks okay, and I do still have my shares and then a handful of calls. Alright, so that's a review of the positions that I have on and just kind of the big bulk of what I've been trading. This next list will be things kind of quickly, but I think that you can find opportunity in. You've got ROST that has a nice daily squeeze, nice weekly chart, and potentially a run into earnings. You've got Urban that I think same concepts as all of these other charts. You pull back down into the 8 and the 21. That's a good spot that you could look at buying, and the shift of the parabolic SAR, all of that looks very good there. Then you got DG. I've been a little bit more hesitant to buy DG because I would like to buy it around 95.60. At the same time, this has been some pretty solid consolidation. So weekly and daily charts of DG both look very good. I know Carolyn was looking to buy APC, so I'm keeping that on my watch list to try and buy that squeeze if it can start to give me a little bit better trigger. Right now it's still kind of questionable to me. You've got TAL that has a good looking squeeze on the weekly chart, not too bad on the daily either. Maybe a little too close to earnings to get excited about that one. And then X, US Steel. I've been avoiding the daily squeeze on this one, but it was interesting to note that it's starting to form a weekly. So that may be a signal or a pattern that is worth keeping an eye on. And then one last one with NUE. So same idea here. If you're looking for some of these that have decent trending patterns to them, you can see that the last weekly squeeze was an excellent move right through here. And I'm just looking to imitate the same thing again. So I hope that's helpful, gives you a good list of tickers to focus on, and we will pick this up tomorrow in the chat room.